Hi friends, welcome back to my channel. Today we are going to have a quick idea on the topic accounting. Accounting, according to AICPA, American Institute of Certified Public Accountants, accounting is an art of recording, classifying, summarizing in a significant manner and in terms of money transactions, events of financial character which are in transactions which are in part or at least of financial character and interpreting the results thereof. That is the definition given for accounting by AICPA. And regarding the origination of accounting, the accounting term was coined by an Italian, that is Sir Luca Pacioli, and he is treated as the father of accounting. And about accounting process, it is the process of identifying, recording, classifying, summarizing, interpreting and communicating financial information relating to an organization to the interested users for judgment and decision making. Then we can move on to the characteristics of accounting. Accounting characteristics mainly includes identification, measurement, recording, classifying, summarizing, analysis and interpretation, and finally communication. So identification involves identification of those transactions that involves or which are of financial nature and relate to the organization. Then the second thing, that is measurement. Measurement includes only those business transactions and events which can be quantified or measured in monetary terms can be considered in accounting. Then third one, it is recording. It is the process of entering business transactions of financial character in the books of original entry in terms of money. And the next step, it is next characteristic is that classifying process includes the process of grouping transactions or entries of one nature at one place. Okay, that is similar nature of transactions are placed at one place. That is what the process called classification or classifying. Then next it is summarizing. Summarizing in the sense it involves presenting the classified data in a manner which is understandable and useful to various users of accounting statements. And this is facilitated through preparing financial statements, trial balance, etc. Then next it is analysis and interpretation. Here the financial data are analyzed and interpreted to help the users to make meaningful judgment to the profitability and financial position of the business. And the last one, it is communication. Communication in the sense that is accounting facilitates communicating the financial statements to the various users, and various users may be internal users, external users, etc. Then we can simply just we can say about the objectives of accounting. The ultimate aim behind accounting is to maintain a systematic and complete record of business transactions and to ascertain the profit earned or loss incurred during a particular accounting period. And third, it is to ascertain the financial position of the business, that is where the business stands now is determined through accounting. And finally, to provide useful information to various interested parties. This interested parties referred here as the users of accounting. Okay. Now we are going to discuss on the three terms, that is bookkeeping, accounting and accountancy. Simply, bookkeeping is an art of recording in the books of accounts. What is bookkeeping? Simply, it's an art of recording in the books of accounts the monetary aspect of commercial and financial transactions. That is, a record keeping is called bookkeeping. Then it is a part of accounting. Bookkeeping is a narrow concept and it is a part of accounting. Okay. So it is concerned with simply identifying, recording and classifying economic transactions and events. Then what about accounting? Accounting is much more wider concept compared to bookkeeping, and here it starts where bookkeeping ends. That is, ultimately accounting starts where bookkeeping ends, and it is concerned with summarizing the economic transactions, analysis and interpretation of economic transactions and events, and also communicating the results to the final users. That is what the term accounting here means. Okay. Then what about accountancy? Accountancy refers to the entire body of the theoretical knowledge of accounting is called accountancy. That is, it is the theory part of accounting. It is the theory part of accounting. Whereas accounting relates to applying the knowledge of accountancy. That is, these two terms are interrelated. That is, accounting is the application of the knowledge of accountancy. That is, it is concerned with the practical aspects, and the theory aspect is covered under the term accountancy. It acts as the base for applying the accounting knowledge. Okay. So this is the difference between bookkeeping, accounting and accountancy. Bookkeeping is a narrow concept. It is a part of accounting, and accounting includes bookkeeping. That is why we call accounting as a wider concept than bookkeeping. And simply in bookkeeping we are recording the transactions and identifying, recording and classifying the transactions here. Whereas in accounting, apart from the recording, they are concerned with summarizing the economic transactions, its analysis and interpretation of economic transaction, and also finally they are communicated to the final users. Then what is accountancy and what is accounting? Accounting is the practical application of accountancy is called accounting. So accountancy is the theoretical base, or the theory part of accounting is called accountancy. Now we can discuss the branches of accounting. Mainly there are three branches of accounting: financial accounting, cost accounting and management accounting. So what is financial accounting? It is concerned with recording of business transactions of financial nature in a systematic manner in order to ascertain the profit or loss of the accounting period, and also to present the financial position of the business. So the end product of financial accounting is trading and profit and loss account and balance sheet. That is, trading and profit and loss account and balance sheet is the end product of financial accounting. Then cost accounting is concerned with ascertainment of total cost and per unit cost of goods or services produced or provided by a business firm. That is what done under cost accounting. And about management accounting, it is concerned with presenting the accounting information in such a manner that helps the management in planning and controlling the operations of a business and in decision making. So these are the brief explanation for the different branches of accounting. Now we can discuss about the systems of accounting. So system of accounting, that is system of recording transactions in the books of accounts generally classified into two types. That is, first one double entry system and the second one single entry system. So the double entry system of accounting was developed by Luca Pacioli in Italy in 15th century. Here under this system, it is based on the principle of dual aspect. That means every transaction has two aspects, that is debit and credit. The basic principle followed is that every debit must have a corresponding credit. Thus, one account is debited and the other is credited. So this is what the basic of double entry system. Then about single entry system, This is not a complete system of maintaining records of financial transactions, and it does not record the twofold effect of each and every transaction. Only personal accounts and cash books are maintained, and no uniformity is maintained under this system while recording transaction. So that is why it is called record accounts from incomplete records. Accounts from incomplete records. That is, single entry system is called accounts from incomplete records, and the accounts maintained under this system are incomplete and unsystematic and therefore not reliable in nature. Now we can discuss about basis of accounting. Profits or losses of a business can be determined following either cash basis accounting or on accrual basis of accounting. Accrual basis is also called mercantile basis of accounting. So, two basis of accounting systems are followed, either cash basis or accrual basis. Accrual basis or mercantile basis accounting. So what is cash basis accounting? We can simply explain like this, that is, under the cash basis of accounting, entries in the books of accounts are made when cash is received or paid and not when the receipts or payments becomes due. That is, revenue is recognized at the time when cash is received and not at the time of sale or change of ownership of goods from seller to buyer. Then at the same time, expenses are recorded only at the time of actual payments. The difference between total revenue and expense is called profit earned or loss suffered in case of cash basis of accounting. Then next it is accrual or mercantile basis of accounting. Under this, revenue is recognized when sales takes place or ownership of goods and services changes from seller to buyer. That is, whether the payment for such sale is received or not is not relevant under this accrual basis of accounting, and it is based on realization and matching principle. That is, Companies Act 2013 requires companies to follow accrual basis of accounting in maintaining books of accounts.